Hi guys, hi everyone. Can you guys hear me clearly? Mm. Mm. Can you guys hear me? Hang on guys. mm, oh okay, everyone is logging in. Just give me a like 1 second. I try to log into the it's and oh, okay. Mm. All right. I believe you guys can hear me so far. Okay. Because nobody respond. Okay, nobody talk to me at all. Anyway, it's okay. All right. Hi guys. Good morning, good afternoon, good evening, wherever you're welcome to IronFX webinar. So today you already see that we will talk about volatility with ATR. Okay, I will keep it short and I will just want to like show you or share with you how we're gonna use the ATR to place like a stop loss or take profit and any like section you can look at. Okay. And before I start the webinars, guys, disclaimer first, okay? Um, this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice, all right? And risk warning, you can see over. Yeah, right. They will say that our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. This product may not be suitable for everyone, so you should ensure that you understand the risk involved. Okay? Go on. And about myself, my name is Peggy. I'm an investment analyst and a prop trader. Basically, a prop trader or proprietary trader, meaning that I took multiple challenges. Okay, and after that, I passed the challenge, and then now I trade with the firm capital. Okay, and I earn by making a profit, and then make the profit split like 80-20, depend on the prop firm. And this is the agenda for today. So basically, we're going to cover the introduction of the introduction to the ATR, how to calculate the ATR, interpreting ATR in trading, how we're going to use the ATR for entry and exit. Right? Okay, so what is the ATR? I believe one of you guys may may or may not heard about it. So basically they say that ATR is stand for average true range. Okay, is a technical indicator that measure the market volatility by calculate the average of the price movement over specific period. Okay, so basically that ATR, if you trade on daily time frame, you can look for the ATR on D1. If you say that okay, you are day trade and then you want to look in H1 and H4, you can do that as well. Okay, and the key point is that the ATR tell you how much the market move, not which direction it move. Okay, for example, let me head over to the gold. Okay, and this one I'm gonna show you about this later. Okay, for example, this is the ATR. I'm using the default setting, which is a period of 14. Okay, this is a period of 14. I'm using the D1. I'm gonna talk about this later. Just now, before I start, I'll just do this for you guys. Okay, it will look like that. They will say that the ATR, it tell you how much the market move, not which direction it move, meaning that whenever, okay, like if you're gonna look, I want to look at the like overbought, oversold, let's just use the RSI, right? This is my RSI. You to look at the RSI, you will know that this is overbought. By price, it stay above 70. But if you're gonna look at the ATR, it doesn't mean this is price on the bearish trend. This meaning that whenever you see like the ATR is like the curve down, this is very strong trend, or this is very strong trend. Either could be bearish or bullish, could be the bearish and bullish as well. Doesn't mean this is bearish, this is a bearish, this is bullish. Okay, no, it works differently. Okay, so let me just here, for example, right? Let me look here. I'm gonna say this is my, you're gonna pay the breakout, right? This is your resistance level. Okay, this is your resistance level. Hello. Anybody talk to me? Okay, nobody. Okay, this is my resistance level, and you can see that whenever price have broken, which is where here, breakout of the resistance, right? This is the breakout. I'm gonna use this. Maybe here the candle. This is the breakout. This is the low volatility, right? It's at the lower point. Whenever price break here, you'll see that after they break, it trend to like have very strong bullish move or very volatile, which is here, right? Price stay. This one I'm using the EMA 200. Okay, sorry, the EMA 20 period. Okay, if you want to know, and you can see that price have really strong rising with strong trend. Okay, and of course they will say that it developed by J. Wallace Wider, okay, created in 1978 for commodity trading. Of course, now it widely used across all markets like stock, forex, or crypto. Okay, and I think now it published a new concept in trading, technical trading system. Okay, I use ATR to place my stop loss whenever I trade the currency. Okay, those are EURUSD, GBP Okay, and no, this is not the one. Okay, sorry about that. Why ATR is matter? Of course, it can help you to for volatility measurements. You can use the ATR for stop loss placement as well. Like whenever you heard about, okay, put your stop loss like with 1 ATR or 1.5 ATR. Okay, and also can help you to put the percent sizing depend on how much the ATR is and profit target. Okay, so you need to remember that higher ATR is equal to higher volatility, larger potential move, which and risk. Meaning, right? Let me just finish this slide first. I'm gonna show you later. Okay, now how we're going to read the ATR just now. They will say that rising ATR, increasing volatility, falling ATR, decreasing volatility, okay, high ATR, high volatility, low ATR with low volatility. Okay, so we're gonna use this to place our stop loss. No, oof, where is my the slide? I have just now, my slide is, oh, sorry, this one. I accidentally hide my slide. Okay, which is, I move back. Okay, here, okay, so I missed this one, okay. So how we're going to calculate the ATR? So step one, so we already understand that the ATR or average true rate is the greatest for those three values. Okay, we have the current high. How you gonna get the ATR this one? Okay, let me pick this one and show you in the goal later. Okay, you use the current high minus the current low, and the second one you use the current high minus the previous close. The third one you use the current low minus the previous close. Okay, so this is for example. And how are we gonna read that here? Okay, the current high is this one, the current low is this one, right? And the B is the current high minus the previous close, which is this over previous close. These are open, right? These are closed. Okay. Or the third and the C or the third one, you use the low, the current low, which is this one, minus the previous close, which is here, right? The close on top. Okay. Let's do here. I got work out just now for you guys. Okay, which is D1. You no need to use the mouse to put here and find the value. What you do, you just look here. Okay, what you need to do, you go to setting and here, open market and chart value. You can just tick. You untick, you cannot see, right? You tick, you will see. So we don't need to find high, low, use this number. The only number that you need to find, which is the previous close, right? The previous close, which is where by now we should already know that this is our open and this is a close below, right? So my previous close is, I put here, you can see that. That would be 42, 45, let's say 34. So I put here, okay. The current high, which is where? Here, 4273.92. The low, the current low is 421867, which is here. You can use the mouse to put somewhere around here, right? You can see that. If you want to this here, right? They'll calculate for you, so you need to use the mouse, the circle to measure. So here, and whenever you put, so we're gonna use the current high. This is the current high minus the current low, which is this one. So they will say that I already calculate. If you want me to calculate for you, the calculator, where is my calculator here? Right, you can use here, which is the current high 42, 47, no, 4273.92 minus 4218.67. That would be 5525, right? Okay, you already get that number. Okay, so the current high, which is 4273.92 minus the previous close, right? The previous close is 40, 42, 45.9. You will get, oof, I'm wrong. High, sorry. 4273. 92 minus 4245.9 equal to 2802. Okay. And after that, you'll get low, the kernel 4218.67 minus, okay, minus previous close 4245.9. You will get 2723. So whenever you get 2723, you just take this number, okay, 28.02 plus 27.23 equal to here 25, sorry, equal to 55.25. So the two range, okay, for the D1 time frame, okay, like today, it's gonna be 55.25. Okay, 55.25. Or this number, let's say, if you say, oh, I don't want to calculate like take a lot of my time. Another way, what you need to do for today is about 55. Okay, meaning that 55, which is 550 pip today, the two range today. But if you're going to talk about average two range for the D1 time frame, look here, that would be 79.36 for gold, meaning at 79, this is meaning that 790 pip average for gold, meaning that for the past 14, the period 14, for the past 14 candle, meaning like we look at the D1, so for the past period 14, right? It's moved average 790 pip. Okay, 790 pip, meaning that, for example, if you're gonna, for example, if you want to sell based on the D1 time frame, okay, let's say, whatever you say that, okay, this is high, this is low. I want to sell, let's say you want to put the sell stop. Okay, meaning that, okay, I'm gonna sell maybe at 4,300, like round number, you're gonna go for short. Okay, at entry price, I'm gonna put exact somewhere around here, for example. And then you want to look here, okay, for the average two range for the ATR, the time frame is about 79. Let's just round up, it's about 80, so 800 pips. You're gonna move here, okay. If you want to enter for the sell, your stop loss is gonna be where? 80, 80, 80. I'm gonna move down first. Meaning that way, 80. You look here, that very far, right? That's the two range. And the take profit, you need to aim for 1 to 1. ATR, I'm gonna move here. The 80, let's just say my stop loss would be 4080, 4380. Where is my stop loss? No, sorry. 4380. No, that is not 80. Sorry, guys. It's not here. There's sorry. I'm 79. But this one I'm gonna use like 50. 80, let's just say 80. So sorry, this could be 80 pip, 800 pip, okay. 800 pip, correct. 800 pip, so that would be 800 pip. I'm blurry already. Okay, that would be, so 800 pip would be here, sorry, 800 pip, 3780. Let's just say I'm gonna aim for 1 to 1. Okay, 1 to 1. You look here, one to one, okay? 1 to 1 would be somewhere around here, okay? Stop loss 80. You will put here, right? So let's say if you put the pending order, 4003, no, I put 4005, 4003, oh, sorry, 05 here. Okay, I want to sell based on this is swing high, this is my swing low. Okay, I'm gonna sell at like Fibonacci 61.8%. You can set the stop loss based on the ATR, which is like 80. So you just plus like 8. This one 80 pip cannot be 80 pip. Price move 800 pip for gold, meaning that if we're gonna plus not 80 pip, here is like 800 pip. 800 pip, 800 pip from this one should be, it's very far. It's gonna be the weekly. It's gonna be the 8,000. Let us put 8,000. Yeah, it's a 8,000 point. 800 pip. Okay. Okay, this one. Okay, 800. This one is you're gonna reach here is a 800. We're gonna let's say like 800 pip, but you're gonna use here is a 800 8,000 point. Okay. 100 point is 10 pip. So that 1 to 1 ATR. This gonna be okay, plus minus a little bit. Okay, this gonna be a take profit for your sell entry if you're gonna sell. Let's just say exact 4005. Meaning based on the ATR. Okay, if you go to, I'm gonna move here. I'm gonna remove that and go to the H4. Okay, so when we zoom into H4, what do you see? Meaning that our stop loss going to be slightly above the ATH, right? Meaning that it probably close above the ATH, meaning they're going to make another all-time high, right? So here, slightly you're going to look here. Okay, it quite makes sense if I want to sell at this level. Okay, this one could be my resistance in H1. So basically, whenever you go to H1, what do you see? This is my sell zone. Just take note, guys, this is my sell zone for my goal today. Okay, I want to sell when price go in the zone. And of course, we know that based on the H1, we have the supply zone here. And the zone is quite big. So either you want to narrow down or get really kind of like narrow the zone. You wait for price to go in the zone, wait for confirmation such as PA or price action, divergence, or chart pattern. And also, if you want to use the Fibonacci, you will say that, okay, at 4305, then Fibonacci is 61.8%. So either if you want to put the sell stop or pending order sell, you can put like either you want to put 4,305, 4305, or you can put like 4300 or 4,300. It depends on you. Okay, if you think, and you need to put the stop loss above the all-time high. I know it's about almost 1,000 pip. This is the average for the daily time frame for the ATR, and then your take profit is gonna be here, meaning that you will get 1 to 1 risk and reward based on this. Nowadays, trust me, gold move is very like totally different from 3 years ago, even like 2 years ago. Last time gold move is like, within a day, maybe like 100 pip or max or most like 200 pip if they have really like high peg news, right? That's why last time, okay, you can scalping gold like 30 and 50 pip. Nowadays, okay, you can see that gold move within 1 to 2 minutes, even 1 minute, like more than 50 pip, or some like even 100 pip. So if you have really tight stop loss, sometimes you will get like stop out and then price move, right? either now today your strategy, you want to trade gold, you need to reduce your lot size. Last time I can tell you, I can trade like 1 lot, 2 lot. Okay, because like if I put like 100 pip for my stop loss, it will take time, okay, for price to go and hit the stop loss. But nowadays, within 5 minutes, gold can just move 100 pip. So if you put 1 lot or 2 lot, high chance 98% are gonna hit the stop loss at like 100 pip before gold move. So nowadays I trade gold, I reduce my lot size, okay, and then I wait. Okay, so you need to reduce. It's not the same like last time. I say that, but of course, if you trade and then the gold is gold, if you trade and then the price is moved at the same your favor, for example, you buy gold and then gold is rising, I'm happy for you, but you need to keep in mind what if they reward and hit the stop loss, right? So now today you cannot really have very tight stop loss unless you really wait for the right entry and wait for confirmation. Okay, but my strategy now today for gold, I reduce my lot size a lot. Okay, I can do a lot because gold move very quick. And I think last 5 days, I think it was the first time that I see that gold for how many? 2,000 point or no, 20,000 point, right? From here to here. Last Friday, no, 20,000 point, which is, let's just say 200 pip. Within a day from here, last Friday. That is a lot, right? You can see that it's a lot. Round up, let's just say like 20,000, sorry, 20,000 point. Usually, no, it's not moved that way, right? You can go D1 within a D1 time frame, right? I will just measure from like here to here. Let's just say about 950 pip. 950 pip, even though like this candle, like let's just say 11 1,000, let's just say 1K pip. Only like the day before, right? It moved 20K point or 1,000 pip. I think that's the first time I see gold move based on the D1 time frame. You can measure. Okay, D1 candle, D1 candle. All right. Where you can just measure from roughly, right? You can see that average about 900 pip per day. Okay. Right. Let's just say we move back long time ago. This is when was that? December 19. Look at December 19. You see that? Per day, 2,000, let's just say 250 pip. Less than that, less than 100 pip. Or maybe in the March 2020, I just roughly 7,000. This one have the high impact news. I know this should be news. And you just look at the candle, right? You can see that it moved just a little bit. Okay, 4,000, 5,000. Nowadays it moved more than 5,000. This one that should be a news. This one when what August 10, that was should be a news. The D1 time frame. Okay, you look. So then after that you just kind of like from your eyes, you can see the candle like move very slow. July, let's just say July also. I just like measure. We can use this one to measure here. Some one day move like less than 300 pip. So like that's why nowadays if we say we scalping, it's very easy for you to earn like 100 pip. It's very quick. Okay, this is the November still. all right? Oh, this one is about, let's just say 300, 400 pip. That would be news. Yeah, like Fridays usually, right? So after that, the candle sold. Then after that, you look at D1 time frame, the beginning of 23rd, 2020. You see that? 2000 is about 200. So you see that whenever price like last time average about 200 to 400 pip within a day is we still can trade, right? That is the per day. But now today 900 pip average. Okay, that's why I say that if you want to trade gold, you reduce your lot size, or if you think that gold is too volatile, which is last Friday, a lot of my community, okay, they lost a lot of money because of gold, because they buy, but gold falling, right? You can see that, like here, and break. I believe that in the lower time frame, there will be people who buy. Okay, there will be people who buy, maybe buy this level. Or maybe they buy, I don't know what they buy, but last Friday, I trade during the Asia section. I hit my target and I stopped. I did not trade. So usually on Friday, I don't trade because based on my data, okay, I record my trade, right? On Friday, I lost money more than I win. I lose more than I win. So I try not to trade on Friday. So Friday I do other thing else. Okay. So some of my friend, they don't trade on Monday because they say that Monday sometimes market too volatile. Sometimes Monday it's really quiet. So they don't trade on Monday. Okay. So they only trade on like Tuesday or Thursday. So based on your trading journal, you see which day it give you more money, and then you focus on the day. If you say that, okay, you have been making the money from, let's just say Monday to Thursday, and then you always lose money on Friday, and then Friday you shouldn't trade. Okay. And if you say that, okay, you are a full-time trader, okay, full-time trader meaning that you shouldn't trade like the full-time working like in the office, like we work in the office like 8 hours per day. Doesn't mean like you need to trade on the 8 hours per day, right? You should just trade like this less than maximum maybe 3 hours. Okay, you look at the chart and the price is not come, and then you trade. If the price didn't come to the setup, then you don't trade. You don't need to look at your computer or at the chart like 8 hours per day. That is not a healthy lifestyle. Okay. Okay, so this is my setup. Basically, I'm gonna wait here. Let's look for another example for the EURUSD. Very easy is that, look here, right? The ATR for the D1 time frame, you don't need to count, because some you say that, okay, I don't like to count, like calculate is like a lot of number. What you need to do, where my ATR? Okay. D1 time frame, the ATR you look here, it's about 68 pip. Meaning that, let's say, based on the D1 time frame, I already thought you identify your resistance. I'm gonna sell at the resistance level. So you put the pending sell, which is you go for short, which is exactly at this number, right? And the ATR for the D1 time frame, just looking at 68 pip. You move this one to 68 pip. You just say here, lovely, okay? You want to aim for just 1-to-1 risk and reward, meaning here, over here is gonna be like 1 risk and reward. Let's just say the take profit is somewhere here. Meaning here. Meaning that if you were to sell here when price is rising, it's almost hit your TP already. It's not hit your stop loss. Okay, you see that? So you said that, okay, so now you have the idea, you said, okay, I'm a part-time trader and I only want to trade and support resistance. If you know how to identify support resistance correctly, you can put a pending order here, and then you use the ATR over here to place your stop loss. For example, you put a stop loss here, and then you say that, okay, based on market structures, okay, you look at EURUSD. Okay, and below here, this you could say, okay, one ATR you use for TP1. Okay, you could say that you're gonna aim here for your TP1. Okay, and the TP2 I'm gonna here, this is gonna be like my support level. I aim for, let's just say you say that you aim for 1.5. Okay, then you will say that, okay, this is gonna be your TP2. Okay, the stop loss is here based on the ATR, which is 68 pip. Okay, this is where you're gonna place stop loss, and then by using this one, then you just calculate your loss size. Okay, meaning loss here they calculate for your account size. You just set your account size, how many like 1,000 or 2,000. The loss size is one, risk and reward, then they will tell you how you're gonna risk $100, right? Then you're gonna place here based on the one. But I'm using the MT5, right? I have the EA to help me to calculate. But the one I don't recommend it because you need to pay. Okay, you need to pay like dollar, it's not free. Okay, so this is the one. For another one for the GBP. Okay, for the EU, you are using the ATR for the time frame is about 68 pip. For the GBP is about 82 pip. Okay, here I have the example just now. Let's say we're gonna sell the resistance level here. Okay, here, and the ATR is 82 pip. Let's just say 82 pip. You can just like round up by like 85, so it's up to you. I just say like 82 pip, for example. 80, just say like 82, somewhere around here. Okay, and then you're gonna aim for the somewhere here, right? Meaning that if you sell here, it's almost here to take profit. Right here. Price rising, this is your pending order, and price falling from here, right? You go to H4. Okay, you look at H4 time frame, right? H4 time frame, what do you see that? This is gonna aim here, the TP1, the TP2 could be here, right? Another, this level. This is gonna be the pullback support for H1 time frame. And you have the demand zone somewhere around here. So basically, D1, okay. TP1 here, TP2 would be here, like one, really reward 1 to 1.3. Okay, stop loss is still the same right here. So you can use this method if you say that, okay, I have no idea where I'm going to place the stop loss. Okay, or another one, you can use the EMA. This one is the EMA to 20. We just call those like EMA for the dynamic like support resistance, or you can put the stop loss or take profit, meaning that here, right? Let's say here, let's say this is the EMA 20, period 20, and if they are at the resistance, okay. From here, in this case, okay, let's say you hold your sell entry. Here, if price go above this entry, meaning that you need to close your sell entry, because if price stay above or close above this level, okay, it might change to like the buy. You can use this to like, okay, where I'm going to exit my position. You can use the EMA at the exit position. Okay, hold the sell, price falling. If you think you still hold, if price close above, and then you close above this, and then you just close your sell entry. But of course we won't, right? Because price has falling from here to here, let's say 250 pip. And after that, you see the money, like that, you plot like 5K. And after that, price rising and close with 250. From just now, let's say you earn from here, you earn 250. Price rising from 250 become 100 pip. What you're gonna choose? I'm gonna choose before a price even reach my EMA 20, because what? Of course, if you know how to look at market structure, this is just the idea. The market structure, we know that these are like OB. Price will have the rejection with this price action, right? If we sell here, I already closed in here. for my sale. If price rising to the resistance here, we can have another sell entry. So it's up to you, okay? Any question, guys? Now, let's say we go back to gold again. Let's say you say that I'm gonna use here. Okay. Let's say okay, I don't have. Let's say you said okay, I cannot look at D1, you think too far for me. I think I prefer H4. Can I try a H4? Yes, your H4 you look H4 moved about 45 pip. 450 pip here. Meaning if you said okay, I think I'm gonna sell based on the at this level, like price close above this, right? Price did not close above. Then you said okay, I want to sell. Let's say you sell at the market price. This is the Asia high, okay? In the M15, I'll show you later. Let's say you open just now, okay? 450 pip, stop loss. This is gonna be what? This is almost at your resistance in the like your sell zone already. And then okay, you're confident that okay, price may not go there. Okay, and then you aim 1-to-1. Your take profit gonna be here. It will go to M15. Okay, these are Asia high. So meaning these are high for today. Okay, you can look here, you can look here. It's the Asia high, London also like closing like like lower than the Asia. Okay, let's just say that okay, you say that the potential for the ATR, if we're gonna look in H4 time frame, it's gonna be here. Then you could hold. Let's just say one. Okay, could be somewhere around here. Let's say, right? Then you can hold, or you would think that okay, I'm scalping. You look at M15 now today. M15 ATR is about how much? How many? What is this number, guys? 90 pip or 900 pip, 90 pip. So let's say you want to sell. Let's say you sell here. You short. Okay. The stop loss would be where? Should be 900. 900. Let's just say 1,000. 1,000. Meaning that you sell here, you put the stop loss above the London high. Take profit. Easily hit your take profit. Right? If you were to open here at the body, and then you just let's just say round up, we just like 1,000 point. Okay. If you hit your take profit, you put here. Or if you can put the Asia high. Risk and reward, you can go here. It's almost hit your take profit, which is this low 45. Okay, so I think now the London, okay, I think this should be London high already. I think they are kind of like a way to see how is the New York gonna react. You can see that right here. This is the New York PM afternoon, Asia open, London open here, and if you're gonna look at M15, actually the London session was sideways already. This is just a ranging in M15. I'm gonna draw draw from the body. It's all ranging in M15, right? You see that? Only the Asia that move a lot. Move from maybe from here 5,000 or 500 pip, and from the Asia high to the low almost also 500 pip. Okay, that move a lot. And then after that, the London is just sideways. Okay. You can use this so you don't need if you don't want to calculate. Or you can use you look at my mouse, right? You look at the number here. You look at I cover, it's the same, right? You look here, okay? Same. 9.63, 9.94, okay, 10 pips. So lastly, average for the gold on M15 is about 100 pip. Okay, 100 pip average for the M15. You look back, it is 50-minute candle, 14, like the previous 14 candle. All right, guys. Okay, I recommended you to use the ATR to press stop loss. I recommended you for if you like to trade like currency. I trade the currency pair. Okay, you see that? Okay, you say that okay. You say that based on here and you think that you have time, right? Have time to monitor when price go in the zone. Okay, this is our zone based on the this one is based on the D1. Okay, when you go to the lower time frame, you see that when to the lower time frame, you see the price action, meaning that in this one, right, whenever you have a price action, you could have tight stop loss and the lot size gonna be bigger. Okay, meaning that you risk, let's just say you put the stop loss there, you risk 1K. Let's just say you risk 1K, let's just say $1,000, and let's just say your lot size is one lot. Okay, but when your price go in and then you see confirmation in M15, you said, okay, you're gonna shift from stop loss here to the stop loss right here. Where's my stop loss? Stop loss here. Okay, and your lot size could be bigger from 1, should be, because your stop loss is tight, right? So here could be 3 lot. Your enter is here. Okay, your enter is here. My take profit. And your take profit is the same, which is right here. Meaning that you're gonna get risk and reward more than 1-to-1. And you only risk how many? $1,000, same, right? You just look here by your eye, you will see. Okay. Okay, because you say, okay, you see the confirmation. You just enter at the market, you risk here 1,000, if price rising, you confident, if price rising, hit stop loss, you lose 1K. Okay, but you see confirmation and then you just aim for ATR using the ATR which is 1, ATR which is 60 pip. So price gonna fall here, gonna hit your take profit, right? Meaning your lot size could be big. This depend on the where your entry as well. Okay, I just like loudly tell you, like, let's say this is gonna be 3 lot, for example. You'll see the real reward by eye, I think it's more than, we can do here. Let's say your not your take profit, this your entry, pivot point. Okay, and you aim here, your stop loss is here. You see that real reward is more than that. It's like 1-to-6. Okay, that's a lot because you have very tight stop loss. Because within the zone, right? Within the zone, you see confirmation, then you short. Okay, so you can use this method. I hope you guys learning something today. Any question, guys? Or now you have any like instrument for me to look for you before I end the webinars? Like I tell you, I personally use ATR for press stop loss for the currency like EURUSD, GBUSD. Okay. Okay, look for the BTC. Come, let's look for BTC together. This one I recommended you to use for gold for the killing time zone. Okay, if you want to use BTC. Anybody buy BTC from like below? Some of the trader they trade BTC during the weekend, but I don't trade during the weekend because sometimes I feel like there's no volume. Okay, based on the BTC, I would say this is a resistance level for H4. I'm gonna not use the ATR. I'm gonna use the RSI. Okay, so this one should be the sell entry, OB, and also the resistance level. So you could sell, right? Now, can we sell? You can go to the lower time frame. Yes, you can sell, right? Based on where? Based on your price action here. So you should sell BTC. Stop loss, you just put above this 112 for the BTC. Okay. Yeah, like BTC, just put above 112. That should be enough, like just above this high. I think, yeah. Somehow at the zone, right, you see also divergence here, like barely divergence here. Okay, so I think you can aim at least here, 109. For the M5. You want to trade like this level. Okay, you see in H1, yeah, this is the one at the break. This was also support level and resistance. Now it becomes the support level. Also, like this ones, maybe someone why support and then have the demand here. Okay, guys. So if you sell, okay, that's gonna be the sell zones. We zoom in to see, right? The confirmation, and then they also sell here. Let's say you did not catch the sell, then you can have like another sell here, the zones. This level. Okay, guys. Anyone? Last one before I end the webinar. Beside BTC, guys. Okay, now we already positive for BTC. Okay, let's say we're gonna use a Fibonacci, right? And I will take profit 50%. So you can use a Fibonacci. Okay, if you're gonna look if they make the pull, they break the low, they make the something like that, then you can still hold your, meaning that this is the previous low, the current low here. If price close below, this is going to be your break of structures, right? Price make a lower low, lower high, and then you can hold your sell entry. Okay, from this one. Take note of that. Okay. Anybody? Anyone, guy? Only BTC. So in the case, gonna end the webinar. Okay, I'm gonna catch up with you again next Monday. Next Monday is gonna be the topic. The reason why I don't want to go too much detail for like how to calculate, to me, I think it's just good to know. I believe you can just, search Google or watch from the YouTube for like the introduction or like really like quite the basic one. I just want to tell you how we're gonna use the ATR in the real life. Okay. I'm gonna look when what is the next topic for our webinars? Oh, October 17. Is this me? Oh yeah. Okay, so next Monday, I'm gonna share with you guys about killing time zone for ICT training strategy. So if you have time, please tune in. Okay, I will share with you guys as well. Okay, that should be all for today, guys. Thank you so much for joining. Again, if you sell, just put stop loss above this. Just put stop loss. If you trade, okay, that's good. If you hold your buy, you can still hold your buy entry. Okay. Based on M15, the market, we still have breakout structure. You're gonna sell here because you think that is the resistance. And we're gonna close either TP1 at 38.2 or you aim for 50%. Okay, guys? Alright, that should be all for today, guys. Thank you so much. See you again on next Monday, guys. Bye for now. Take care and good luck. Bye-bye. Thank you, guys.